Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we'll be focusing on the current events in the markets, trying to understand the key highlight events that we are expecting in the economic calendar. Of course, we'll do technical analysis to try and understand the key market trends, key market patterns, and potential effects for the day as well as for the week. Once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So let's get started with the economic calendar, try to understand the key market events. And once we are through with that, then we focus on other highlights on the technical charts. So from the economic calendar, as you can see, we don't have much happening today. Today being the Monday, the 15th of January, 2024. So let's get things started. So the first event of the day, which was basically a sequence of low impact news, we had M2 money stock from Japan, which showed an increase of 2.3%, which was similar as the previous period of November. Then we had the right move housing price index in the UK, which showed an improvement to 1.3%. Apologies for that. So it showed an improvement of 1.3%. Then we had the MI inflation gauge in Australia, which came in at 1.0%, an improvement from the previous reading of 0.3%. Then we had the ANZ job advertisements in Australia, which were up 0.1%. compared to a previous contraction of negative 5.1%. Then we had the machine tool orders in Japan, which came in at negative 9.9%, an improvement from the previous reading of negative 13.6%. Then we had the German wholesale price index, negative 0.6%. This wasn't the previous reading of negative 0.2%. Then we had the Italian trade balance, which basically improved, weakened to 3.89 billion, which was slower than the expectation as well as the previous reading. And now going forward for the rest of the day, we have the World Economic Forum meetings. Industrial production in the Eurozone, this one has already been released, slightly improved to negative 0.3% as expected from the previous reading of negative 0.7%. Then the European trade balance at 14.8 billion, which was a huge improvement from the expected 11.2, the previous reading of 11.1 billion. So there will also be having Eurogroup group meetings happening all day. Then at 4:30 p.m., we'll be having manufacturing sales from Canada, wholesale sales from Canada, as well as a Bank of Canada business outlook survey. So I think the highest potential that we're expecting to see a market moving event will be at 4:30 p.m. when we have events, both manufacturing sales as well as our wholesale sales in Canada. So clearly, if we see a signs of sales improving, it should be positive for the Canadian dollar. But if both of the data, manufacturing and wholesale sales are improving, then we should be expecting to see the Canadian dollar strengthening against other currencies. So with that in mind, there's this expectation that we should be seeing some very slow markets today as a result of the bank holiday happening in the US today. So today is what we call the Martin Luther King Jr. Day, and it's a public holiday in the US, meaning that the stock market is closed, will not be opening. So also the bond markets are also closed, so no activity there. And of course, for commodity markets, there will be limited trading, whereas currency markets will continue trading normally. So we expect to see currency markets at a low volume since there will be little or no participation from American funds. So whenever you have a public holiday, it kind of affects the markets. So we don't have major moves. And of course, as Forex traders, we expect to benefit mostly when the markets are volatile. So with little to no volatility in the markets, then opportunities tend to be less and less. So, and as we proceed, there's a couple of announcements I would like to make. So the very first announcement is an apology for the session. Normally we do it at 11 a.m., but today we had a couple of difficulties in setting up the sessions, and this led to the delay. So we had to push it forward 2 p.m. So second announcement is to highlight the fact that these sessions are never investment advice. They are always educational. So we do not recommend any assets trade. So it's on you to do your own research, identify the right market opportunities, and of course, practice proper risk management. So with this in mind, we know that it's a low volatility day, and a majority of the volatility is expected to resume in the market Tuesday, that is tomorrow. So we know that last week, spot Bitcoin ETFs were approved by the Securities and Exchange Commission of the US, and they began trading with a very high volume, and this led to quite an increased volatility in Bitcoin. And now investors are looking forward to the second day of trading, but now since we have a public holiday in the US, they will not be trading today. So the ETFs will start trading officially, that is the second day on Tuesday, which is tomorrow. So we will be expecting to see some volatility coming into the markets. So the key highlights on Tuesday will be the Japanese Producer Price Index at the morning at 8 a.m. Then we'll have job market report in the UK, where we will be focusing on the 3-month count change or the number of new people claiming for unemployment insurance in the UK. We look at the wage growth, or what we call the average earnings index, and in this case, it's quarter over year. Then look at the unemployment rate in the UK, which is expected to remain at the same level of 4.2%. So as the World Economic Forum annual meetings continue, we'll also be focused on the German ZEW Economic Sector Survey. This will be released at 1 p.m. Then later on, we'll get more news from Canada. And this is the inflation rate. So the consumer price index inflation will be released at 4:30 p.m. So we expect over the month of December, prices went down by negative 0.3% compared to the previous month where prices had increased by 0.1%. So as we all know, a majority of these central banks, major central banks, US, they have been hiking interest rates so that inflation. So if Canada eventually achieves low inflation towards the percent target, then in that case, we should be expecting that the Bank of Canada will begin cutting rates early. And in that case, it should be weakening for the Canadian dollar. However, if the current trend continues, where we are seeing inflation on the rise again, then in that case, it may represent a situation where central banks may have to hold rates higher for longer. So if the Bank of Canada was to hold interest rates higher for longer, then that should be positive or strengthening for the Canadian dollar. So that will be the key highlight for tomorrow. And of course, we'll also be looking at the Empire State Manufacturing Index, as well as a speech from the Bank of England Governor Bailey at 6 p.m. tomorrow. Then on Wednesday, we look at the industrial production in China, as well as the GDP, retail sales, fixed asset investments, and the NBS press conference. And also the unemployment rate all released at the same time at 5 a.m. And this is expected to increase the volatility in CNY pairs, as well as Chinese equity indices. Also, we know that Chinese data tends to have an impact on oil prices. So very strong Chinese economy tends to be positive for oil prices. But then if it's weaker, then it tends to be negative for oil prices. So we're also looking at the inflation data from the UK, that is the consumer price index year by year, the core CPI, as well as producer price index and retail price index at 10 a.m. Then later on, we will be looking at the housing price index in the UK before we look at the inflation data from the Eurozone at 1 p.m. So in the afternoon at 4:30 p.m., this is when we get the US for retail sales data. And I believe this will be the biggest news of the week. So from the economic calendar, retail sales report will be very important for all traders. And I expect these to rumble the markets, bring in some much needed volatility, cause create opportunities for traders. So later on, we get to see the industrial production as well as the capacity utilization rate. So the ECB President Lagarde is set to issue a speech on Wednesday at 6:15 p.m. And this will be on a town hall meeting titled How to Trust Economics. So then once we get on Thursday, we'll begin with a major highlight of the job market report in Australia, and this will be at 3:30 a.m. Then later on, we will be looking at the unemployment claims in the US at 4:30 p.m. before focusing on the building permits, the Philadelphia Fed Manufacturing Index, as well as housing starts. So the ECB president is set to issue a secondary speech, and this is at a discussion panel titled Uniting Europe's Markets. So that also has the potential to cause some volatility in the markets. Then for commodity traders, we know that we will be looking at the inventories in the US, looking at the natural gas storage, as well as crude oil inventories on 6:30 as well as 7 p.m. on Thursday in the afternoon. So then towards the end of the week, that is Friday, look at the national core CPI for Japan at 2:30 a.m. Retail sales, this will be happening at 10 a.m. for the UK. Producer price index for Switzerland. Then another speech by the ECB President Lagarde. So it seems to be quite a busy week for her. So in this case, she's due to participate in a panel discussion on global economic outlook. And this is on Friday at 1 p.m. So towards the end of the week, look at the core retail sales as well as retail sales in Canada, the CB leading index in the UK, and of course the preliminary University of Michigan consumer sentiment survey. Then we look at the existing home sales, and as soon as we go through that in the preliminary University of Michigan inflation expectation survey, we end the week with a speech from FOMC member Daly, and this will be at 12:15 a.m. on Saturday, the 20th of January. So that's the highlight of the economic calendar and the key events that we'll be expecting. So another key thing I want us to focus on is the CME Fed Funds Futures. So the next Fed meeting will be happening on the 31st of January. So that is 2 weeks from now. And the market is already pricing in a 95.3% probability that the Fed will not be cutting interest rates, but rather it will be holding at the current level. So since the current level is considered high enough, then it basically creates a carry trade for economies where the interest rates are really low, especially Japan. So we know that the current interest rate level in Japan is 0.1%, and the upper bound on the US interest rate is 5.5%, which basically creates a carry trade of over 5%, meaning it's free money for investment funds that basically move money from Japan, the US. Basically, borrow at low interest rates in Japan and invest at high interest rates in the US, which is continuously leading to an upward trajectory in USD JPY. So there's also an extension focusing on the 20th of March of this year. So the next meeting, that is after the 31st of January, in this case, there's a 70% probability that the Fed will go for a rate cut and reduce interest rates by 25 basis points to 5% and 5.25% being the upper bound. So in this case, with this expectation and the market largely pricing in a rate cut by March, this means that at some point we'll start seeing the dollar weakening. But as for now, as we look forward to the next Fed meeting, and also following the data that we've been seeing, where we saw the job market softening and the non-farm payrolls that are being revised downwards. And now the consumer price index, which came in last week, and we saw inflation spiking from 3.1% to 3.4%, then the Fed might have quite a number of reasons to continue holding rates higher. And key highlight is the big spike in inflation to 3.4%, which was up from a 5-month low. So in this case, there's a good chance the Fed will hold rates higher, which is basically positive for the dollar. So with that in mind, we'll be looking at a couple of charts, try to understand the key trends and directions. Once we go through this, hopefully everyone will be trading from an informed perspective. So I'll be checking on the questions to see if you guys have any questions. And if there's any questions, we'll respond to that as we proceed with the presentation. So hello, Richie. Hello, Nkirote. And Willie, thank you guys for joining the session. I appreciate seeing you guys here. So let's get on with some technical analysis and try to understand what's happening. So I'll be starting with the dollar index. So since the beginning of the year, dollar index has been trading on a tight range. So the very first day of trading, which was the 2nd of January, dollar index was pretty strong and made a good rally and entered this zone. But then since that day, 3rd of January day, the market has largely been moving sideways, and this is for the dollar index. The upper range side of the range being 100.492, and the lower range being 101.73. However, there seems to be some strength in the dollar. I noticed the first cross tick was a strong green, market pulled back, and then continued all the way up, meaning that the dollar index is pretty strong for the day. So for any intraday traders, you know what that means. If there's an extremely strong dollar, then you find a weaker currency and pair that against it. And in this case, one of our favorites has been USD JPY. And so far, as you can see, the dollar has been gaining against the yen. So since the opening of the day, pushed up, pulled back, and then continued moving higher. And there's still more room for upside. If you look at the most recent high, that is yesterday's high, we have already broken that. So the potential is that the market goes for the previous high here, and this is 145.942. So there's still more room for upside in USD JPY pair. And as long as the fundamentals remain the same, then the potential for the market eventually getting to the previous high remains significantly high. So in this case, we have two target areas. The first target area is around this zone here, which was marked as a high. And I believe this one was on the first week of trading. Then for last week's high, we could also be pushing higher to test this area. So as long as the dollar index remains strong, then there is a possibility continue strengthening against the yen, get these potential to this other level. So it's also likely that we could be seeing the dollar index or the dollar strengthening against the euro and eventually breaking the support level, which has been holding since the beginning of the year. So we have seen this support play out several times in the market. And every time the market has gotten this area this year, it has bounced strongly and higher. However, if you are to observe the highs that the market has been forming, then it's pretty clear that it was forming higher highs, but then right now it's not very confident. You can't see any higher highs here. So it's a market that is now changing trajectory and now moving downwards. So if we were to think in terms of Friday's high and then, Thursday's high is Thursday last week, followed by Friday's high and then today's high, then you can see the highs are getting lower. And the potential for Euro USD breaking once the lower side now becomes quite significant. If there's that potential that the market could break, then head lower. So the key idea is to watch for a potential breakout. And if it happens, then we trade downwards towards the previous bottom here. So for pound USD, it's a similar case. It has been finding some very nice support along these lines here. But then from the last couple or set of candlesticks, there seems to be some strength in the bearish momentum here. And since this red candlestick already broke this area, now we are waiting for confirmation. And if that happens, then we should be able to see the market moving further downwards. So in this case, a potential drop to this area would be playable. And it's likely that the market would accelerate downwards and get to 1.26848. This is based on the dollar strength persisting in the markets. So as for USD CAD, what we are seeing is the dollar strengthening against the Canadian dollar and attempting to get to a previous high. So this resistance has already been broken, and now we are headed to another high. This is a high that we saw on Thursday last week. So potentially the market is gunning to get to this area right here. So apologies for a moment. I think I didn't switch off my phone. Then we have gold here, which has been pretty strong for the last 2 days. So Thursday and Friday, we saw gold making pretty strong momentum. But then, since it's priced in dollars, then a day where the dollar value is now strengthening, we are seeing gold take a step backwards and potentially would be seeing the market getting back to the breakout point. So remember, this trend line was broken all the way down here. So if the dollar index continues strengthening and strengthens against the dollar, then a pullback Friday's low could be something that is payable or Friday's open. So in this case, it's just a matter of observing price action. And of course, today you don't have much momentum. So there's a likelihood that this momentum will be coming back into the markets tomorrow. So for AUD/USD, we already seeing the Australian dollar being pretty weak against the dollar. And now potential break might be on the horizon. So last week, we analyzed and saw that the market was consistently forming lower highs. Then the lows were significantly equal. They were not basically going lower. So if you look at the sequence of lows that we are experiencing here, we were not having lower lows. And then eventually the market broke towards the lower side, bounced strongly, but now it's looking to retest this support here, which basically implies that there's more room for downside momentum. Of course, we have a lower side trend line here, which implies that the market might be headed for this blue trend line here. So there's a good likelihood we could be seeing a continuation of this bearish momentum as long as the dollar strength persists. Then we have the UT 100 or the Nasdaq 100 index, which has been pretty strong since the beginning of the year. So on the first week, it started by weakening. So we saw the market pulling back downwards about 2%. And then a very strong recovery last week. But then since that recovery, it seems like the market is just consolidating. We don't have much happening here. So in this case, it's a wait and see kind of scenario, see the direction that the market might take now. So we don't know yet the direction that the market will take. You can see the swings that happened from Thursday and then Friday and today being Monday. There seems to be a likelihood that the market might end the day on the lower side. And one of the reasons this could be playing out is as a result of the data that we saw on Friday last week. Oh, sorry, not on Friday, but Thursday. So the data we saw on Thursday, which basically led to the big sell of the Nasdaq, was that the inflation had jumped higher, 3.4%. And this is data that might contribute to the Fed deciding to hold rates higher for longer. This is not good for equities. Equities want cheaper capital. They want to see interest rates being cut. So as a result, we are seeing this weakness, and the market has been unable to form a higher high since the prices we saw on Thursday last week. So the potential for the market continuing to push further back downwards remains highly likely. And we could be seeing this happening across board also for the US 30 or the Dow Jones, and the same case for the S&P 500. So as for the oil markets, they made quite a strong rally last week. I had insisted all week that we start looking for shorts. Then the market was pretty strong. So we saw quite a positive rally going all the way up. Eventually, the market got some sense and pulled back downwards. So what we are seeing here is the market pricing in the information that the entire Red Sea shipping route has been destabilized. And with that destabilization, it basically means that there is less business happening around the world. So with that destabilization, we saw price going up all the way up here. But then oil supply is significantly high. We also saw Angola getting out of OPEC, Nigeria expanding its output, and this is happening in a global economy that is still significantly low. So markets are basically pricing in much weaker oil prices. And also remember, we have not broken this trend line yet. So this trend line acting out as a major resistance level, then the potential for further downside now begins to make more sense. So European equity indices made a strong rally last week. Then today we are seeing the big sell-off happening, especially for the French 40 index. Yes, it seems like we are on this slow channel, and you can already see this playing out. And we are currently on a swing where the market is moving from the upper trend line towards the lower trend line. Now, the potential for an extension of this bearish momentum seems more likely. So we are also seeing it in the Euro 50 cash index. Market attempted to go up, failed, and is now pulling back downwards. And also, if you look at the UK 100 or the FTSE 100, we managed to break this support here last week on Thursday. Market pulled back on Friday, and now on Monday, it's basically continuing to push down lower. So there's that potential that the market could eventually get to this support level or even push down below to another previous support level area here. So as for Bitcoin, we have seen a big sell-off after the acceleration to almost $59,000 per Bitcoin. So prices have dropped over 10%. This is about 14.77%. So this morning, the market attempted to make a recovery, but that has not played out well. So what we are seeing is the price of Bitcoin now retesting a key level support. So as we head up to Tuesday, and we try to price in the ETF news, and ETFs looking for more Bitcoin to supply their clients, then in this case, it seems likely that the market might bounce here, head back upwards after bouncing this key level support. So I largely expect or anticipate to see price bouncing from here and moving up higher. But then we will have to wait until the ETFs start trading tomorrow. So for New Zealand USD, we have seen a big acceleration downwards, which is highly correlated with what we have seen with Audi USD. So right now, I think the trade is too far gone. It's not the likely area to short. So shorting earlier in the day would have made more sense. This area as a target. Since the market has already got to that area, then it might make more sense to wait and see what price presents us next. So as for USD Swiss franc, we had projected the market to rally all the way up and get to 0.85752. This didn't play out. Yes, the market went up, but did not quite get to the target. So pull back downwards on Thursday. Friday was a more mixed momentum. And today, it seems like the dollar is pretty strong. So we could be seeing the market now retesting the highest price that we saw last week. In this case, an area around 0.85654. So thank you very much, guys. Thank you for your time. And I hope to see you on the next session. Remember, tomorrow we have two sessions, one at 11 a.m. and one at 4 p.m. So we'll be trading the London Open as well as the New York Open. So I can see Martinez Forest Academy Zambia. Hello and welcome to the session. I believe I have already covered gold. Geopolitical war behind gold's rally. No, I think it's a market switching off from risk. So whenever you see markets trying to price in an uncertainty, so whenever there's uncertainty in the market, then you tend to see gold prices accelerating. And then if there's certainty, then people will tend to sell gold and then buy back into riskier assets. So it was more of a switch off from risk on to risk off, but now I think the markets are getting back risk on, especially considering what has been happening with the S&P 500. So if you look at the top stocks in the S&P 500 and how they have performed over the first 2 weeks of the year, with stocks such as NVIDIA being up 10%, Microsoft being up 3.31%, beating Apple to become the biggest company in the US, then we are seeing quite a good number of positives. So this basically implies that investors are still on risk-on mode. So we are seeing quite a large number of stocks, especially in the tech sector, making big momentums upwards. And this represents the idea that the markets are risk-on, and this could imply much weaker gold going forward. So there's a good likelihood we will be seeing gold continue to weaken in the markets. And with further weakness, it basically represents further opportunities for traders. So in this case, from what we are seeing, it's a market that made quite an acceleration on Thursday and Friday. But then once we got this resistance around $2,062 per ounce of gold, now it seems like the market is pushing back downwards. And this coupled with a strong dollar basically implies a strong likelihood gold pulls back and gets the breaking point, which was around $2,033 per ounce of gold. So thank you very much, guys, and I hope to see you in the next session. Hopefully, you got to learn some insight in the markets today. Thank you. See you then.